All right, what's up, everybody? Cameron Fous here. It's July 20th. Just getting it started here with the first ever absolutely free Fous webinar. Basically, we're doing an epic deal today. Basically, 50% off of a Fous Elite subscription. When you calculate this out, you're basically paying for the lowest tier subscription of the Fous Alert subscriber, which is $99 per month. You're basically paying at that rate, which is $99 per month, for a full year. Note that this is only for annual subscriptions. For when you sign up to the Fous Elite subscription, you're not being billed, once a month. This is a one-time payment of $1,197. That's 50% off of what would be about $2,400 if you were paying for Fous TV or Fous Elite as a monthly subscriber. So, this is a ridiculous deal that, I've just been talking with the guy at Profitly about today, and we decided that we were just going to do this one-time offer just to see how it goes. I'm trying to get more people to come watch Fous TV. The first 2 hours of Fous TV is when, the majority of the action happens. That's basically when, within the first 2 hours of trading, I actually did a blog post about this a few weeks ago, which is basically when all the action happens. That's kind of when I decide, and if I'm basically the time frame when I know that I'm finding the picks that I want for the day. If I don't find anything within those first 2 hours, it's likely that I might not even trade something for the rest of the day, because the opening is when you get that first pop in those trades. So for example, let's take a look at A1, which is today. I actually made about $2,000 on this stock. Actually alerted pre-market. It said in the chat room, said, hey, hold on, John Yang, what I'm going to do here, if you haven't been into the webinar yet, people are asking questions and stuff in the chat. Basically, I'm just going to talk for a little bit about some of the stocks and whatnot, and just kind of do a little bit of trade review. And then at the end, we can ask questions, anything about the discount deal today, or if you have any questions about stocks. I think first I'll answer questions about any stocks, and then after that, we can go into questions about signing up for the 50% off discount. But anyways, let's get back to A1 today. I'll kind of walk you through my thought process and the technical analysis of this trade. This is actually a trade that's more fitting towards my second DVD that's coming out, Fous 4x2. Fous 4, which is based on my core strategy, is basically all about swing trading, which is holding stocks overnight, for a couple days to possibly a couple weeks. But Fous 4 Part 2 is basically kind of how to implement day trading or intraday charts into the Fous 4 strategy. And it also works for stocks that aren't even part of the Fous 4 criteria. As for instance, A1 right here, this is not a Fous 4 pattern, but it did have a Fous 4 Part 2 intraday pattern that I actually try to combine with Fous 4 charts. But for this instance, this was basically just an intraday pattern that I was buying into. First off, if we take a look back here on A1, let's go to a 5-minute intraday chart. Basically, this was getting a gap open this morning on news about they got some kind of a deal here about, I don't even know what the deal was. It doesn't really matter. As long as there's some kind of news about a stock, that's going to create hype, which gives, a reason to buy. It doesn't even matter what the news is. As long as you see people buying because of some kind of news, obviously, some kind of news matters, what the actual details are, but, basically all I trade off is hype and chart patterns. So if there's a chart pattern that I see, in addition, there's some kind of news release out, that gives me a reason to even more so buy into that chart pattern. But basically, A1, what I was looking at here this morning, this was yesterday's peak out resistance here at 75 cents. Pre-market, we were trading below that. We were trading about 73 to 75 cents. I posted in the chat room this morning, hey, check out A1. This has this PR news out. and actually bought pre-market at 75 cents right here, hoping that it would break out above yesterday's peak resistance, which was 75 cents. And actually did start breaking out above that pre-market, and actually added again at 77 cents. My first initial buy was 10,000 shares at 75. I then alerted again at 77 cents, adding 5,000 additional shares there to this position. And we actually did get open up near 80 cents. We came all the way back down to 75 cents. So, you know, it was looking a little bit hairy here on A1 this morning out of the gates. Just, you know, we started selling off as soon as we bought in there, but we did have a little bit of breathing room because we got an early pre-market here as it broke out above 75 cents, which was yesterday's high resistance. Going forward, this broke out of another pattern, which is what I call an F pattern. An F pattern is basically when a stock gaps up in the morning and forms some kind of a flag pattern in which once that high of the day breaks, that triggers a buy signal. And it's basically an intraday pattern that you can buy into, and there's usually at least a short-term spike in that price action. So what happened here on A1, we got that gap open this morning. Let's shorten up this chart a little bit. We got that gap open on the stock. On volume, you always want to see some kind of volume or some kind of news, something that's pushing the stock, something that's going to give momentum and, you know, just get people to buy into this sucker, because all we're looking for is momentum. But once that kind of flags and breaks that high of the day, that's usually a sign of another potential strong push going forward. You know, at least very short term. Sometimes it's the beginning of a huge run. Sometimes it's just a very short-term spike before it kind of craps out, and it might just be a very short-term opportunity to take profits on that short-term hype right there, or a short-term pop, and that's exactly what we did here today. This broke 80 cents, which was the high of the day, this very short-term flag. I actually sold at 85.5, I believe was my exit. It was either 85 or 85.5. I made about $1,500 to $1,700 here, just selling into that short-term spike. You know, we were already up a little bit. The stock was, you know, kind of trading crazy. The market was down. And so, you know, I just wanted to take those short-term profits. I was up decently from that intraday buy pre-market at 75 cents, and it ended up working out. The stock came all the way back down to a low of 78 cents at one point, which, you know, would have basically put me at a very small gain. So I took advantage of that very short-term pop. And a lot of times, you know, I can trade a short-term pop like this and just walk away for the rest of the day and just be done, because that's all that stock might be doing for the rest of the day. But I actually did rebuy into the stock at 82.5, and this, you know, consolidated. I think it was right about here. I bought in and alerted again, 10,000 shares at 82.5. Basically, what I was looking for was a breakout above this other resistance level that was forming at 83 cents. And a breakout above here was definitely going to push towards another high of the day test, and that's exactly what happened here. We actually retested highs of the day. We actually broke out here. I actually sold at 86.5 cents here again. You know, it's always effective to take profits when a stock is at the highs of the day. You know, you're never going to pick a top of the stock unless you're selling on strength. You know, a lot of people, you know, once they get to those breakout levels, they're thinking, oh, how much higher is this going to go? But sometimes you just got to take advantage of that strength and sell and take your profit. I made about another 400 quick bucks there. That put me about $2,000 profit on A1 in, you know, just a very short amount of time within the open. And then check out what happened for the rest of the day. This thing consolidated and then completely crashed here into the close, back down to 75 cents where I had initially bought it. So, you know, sometimes day trading is, you know, a huge benefit, and that's why people that are under $25,000 in their accounts, I recommend a broker like SureTrader, simply for the fact because, you know, you wouldn't have been able to get in and out of this and take advantage of that short-term gain. You know, if you weren't at your limit on day trades, you know, you would have been able to, but you know, sometimes you're going to be at your limit and you're not going to be able to take advantage of this, or you're going to get your account locked up for, you know, 3 months or whatever it is. So it's very important to be able to take advantage of full day trading capabilities in your account, you know, and it helps you get past that $25,000 mark, which is a very difficult thing to do for people that are under $25,000. Just being able to get above that, it's kind of a whole mental just mind brain fart, just trying to get past that barrier of 25,000. It's a very difficult thing to do. It took me a while to do that as well. But I was with a prop firm under $25,000, meaning I did have full day trading capabilities. It definitely did help. It was actually a very good prop firm that I liked a lot, but they did go out of business, I believe, in about 2008 or 2009. But anyways, that was a trade on A1. Another example of an F pattern that I wanted to show you, which was a little bit better looking one, was PSTI. Same pattern here. It's got that spike up on volume here. Let's shorten this up. Followed by a consolidation, and then as soon as that high of the day broke here on the 2-minute chart, that gave way to a short-term pop in price action. And what I usually look for a trend reversal there is if it breaks down the 13 EMA. The 13 EMA is a huge part of my trading strategy. This is something that I look at on the daily chart as well as intraday charting patterns. But it's basically when the chart breaks down that short-term trend on the 2-minute or whatever time frame you're looking at, that could mean potential reversal in this stock's short-term trend, or it might just mean a slowdown and it might be trading flat for a while. But a lot of times it could be a wise decision to get out of that stock. For instance, this stock, if you bought in on this intraday F pattern breakout at 357, it rose to a high of 85 cents. You could have, it's not a huge gain, but it did make that short-term pop and gave you an opportunity, maybe if you were already long the stock, to take advantage of that strength and sell into that, or to just even a quick day trade scalp. So these morning F patterns are definitely something you want to keep an eye on, and it's a great way to indicate if you wanted to sell into a quick pop, and also see how it broke down the 13 EMA here. That kind of reversed the trend from there, and this came back down and closed at 338 into the day. So these intraday patterns are basically what I'm going to be talking about all throughout the next DVD that I'm going to be creating. What was another one that I was looking at here? STEM. This was also another F pattern breakout that actually was a red to green move as well. If you don't know what a red to green move is, it's basically when a stock opens in the red and then comes back, crosses the green barrier, crosses that basically zero barrier line. That kind of determines whether stock's red or green for the day. This is TC2000 software that I use. One of the reasons why I like it so much is it gives you this clear red to green indication yellow line. So on STEM, let's take a look at the daily chart. This thing had that huge push the other day. I talked about this morning, said, hey, check out this red to green move here at about, it was about 144, 145 when it occurred. But it was a sketchy stock. This thing was all over the place. I failed to pull the trigger, so I opted out of this stock. But it did, in fact, form another F pattern here as well. You can see that big spike up on volume followed by the consolidation. As soon as that broke that high of the day at about the 150-ish level, it kind of rode the 13 EMA, bounced off it here, then rode again, and then kind of peaked out here at 170. So that's 150 to 170. That's a decent pop that you're able to have a day trade scalp there if you decide to take that risk. Day trading. Okay, here we go. Now I'm a little bit lost. What was I just talking about? PDHM. So PPHM, this is a great example of a daily chart Fous revival pattern. This is where swing trading can really benefit you, as opposed to A1 that I traded today. I made that quick 2 grand, bought in, sold at the top, came all the way back down. I would be at zero profits here if I was still holding the stock. But let's see, PPHM. This is basically the same kind of pattern here, but on a daily scale. Same thing where you ride the 13 EMA, and this stock, these chart patterns can make humongous moves. PPHM broke out here, this revival pattern. Basically what a revival pattern is, a stock that's, the lead-in trend is bearish, and why I call it a revival pattern is basically, the stock is dead. There's, obviously nothing good going for it here. And a revival pattern is basically when it breaks out of a 3-phase consolidation pattern, somewhat of an ascending triangle. This is all detailed for 7.5 hours on the Fous 4 DVDs, but it's basically a breakout pattern that forms at or near the bottom of some kind of a bearish trend. So obviously here's the lead-in bearish trend. The stock breaks out of this triangle pattern. You can draw this clear neckline resistance. As soon as that breaks, that's a revival pattern to play. Basically, the stock is reviving itself, and it's potentially going to make a big move. Sometimes it doesn't make a gigantic move, but sometimes, for instance, with this stock, PPHM, this thing just absolutely skyrocketed over 100% from my initial buy call at 61.5 cents when I alerted in right here. I actually sold right here because, I've had a very short-term mentality lately just because of how volatile the market is. And a lot of times, you'll give back all your gains just like I would have today on A1. If I went in and just take those short, quick-term profits, I'd be at zero gain right now. Instead, I had a very short-term mentality. I, just took the profit while I had it, made 2 grand, and now I'm out of the stock. I can move on and relax. But, there's other times when it's, you completely regret and you're like, damn it, why didn't I just fall into my core strategy of swing trading? I would be up, tenfold right now on this stock as opposed to what I only made on it. So, it's hard to decipher when to have that short-term mentality. One way to gauge it is, today the market was down, 100-something points. So obviously breakouts are going to have, a very hard time holding their gains. So day trading wise, it was very wise to, just lock in your quick gains because the whole sentiment across the market today was to sell. That's one way to kind of gauge your buy-sell strategy. But, other times, especially when the market's bullish, you're going to see a lot of patterns like this here on PPHM. A lot of it's, kind of cyclical as well. Between just before Christmas time and a few months into the year, that's usually when you're going to see a lot of big moves like this, where you're going to want to swing for the fence and, hold on to these stocks, let it ride the 13 EMA on the daily chart, because a lot of them you might catch these big, 30 to 40 to 100% gainers sometimes. Another one was HZNP, same exact pattern. This was a Fous revival pattern. You can see here the lead-in trend, bearish, followed by this breakout pattern. We got that clear neckline to buy into. I alerted right here at about 4:30, I believe, and this thing ramped up over 100%, I think, right here, up to about 857. I was a little baby. I sold down here because I was just completely impatient. But it's the exact same pattern that I detail and have detailed for the past 7-odd years that I've been trading. And these are the kind of moves that some of these patterns can make. So if you have the patience, of which sometimes I don't, obviously, as I sold with both I just had a Freudian slip with Bob asking about PRMW here in the chat. PPHM and HZNP, these are both the same exact pattern. LIVE, this was another one. This was the Fous Force pattern that broke out here, that ramped up, over 100% on this breakout. So these are all, the similar style of breakout pattern. The only kind of differences is how the lead-in trend is for these stocks. But Bob's asking about PRMW. Somebody asked about this earlier today. This is somewhat of, a revival pattern. It's actually looking pretty bullish here. breaking out above these past highs. But this could definitely see a continuation here. This is probably not something I'm going to buy into. Maybe I'll regret it, maybe I won't, but there's actually not really a clear Fous 4 pattern here. It did reverse on the 13 EMA, come back down, retest that support again, and then ramp back up. So the 13 EMA is definitely trending on this stock right now. Volume on this stock, is relatively low. Unfortunately, there have been a lot of really low volume movers that have been actually breaking out strong. Stocks that have days like this where we're looking at 90,000 shares in a day. These are stocks that can definitely get me into trouble, if I'm trading 10,000 shares in the stock and all of a sudden it has the bid drops out on me and I have nobody to sell into, and I'm holding 10,000 shares, and then I'm going to move it, a couple pennies on my 10,000 shares if I sell into that. And so I try to avoid these stocks that have no liquidity because it's hard to sell when you're holding, about a 10,000 share position potentially on some stock like this. Another one was Bone. This was one that I called out yesterday. This was a Fous 4 revival pattern. I called this out yesterday at about 144, 145. And then this thing just absolutely ripped up 20% yesterday. Came down a little bit today, but same pattern here. Got that lead-in trend followed by this breakout of this neckline here. It broke out yesterday about 145. The only problem is that it had very low average volume. See, there's a 72,000 share a day right here, and that kind of scares me. So I avoided buying into this stock, basically just due to how low the volume is sometimes. But it did rip, and now I obviously regret not buying it. But these patterns can and do rip the upside. I just try to find stocks that are liquidable, obviously, so I can get in and out of the stock, as well as I have a following of people that obviously trade some of the stocks that I do. So I try to trade stocks that we can all trade together without us getting into some kind of trouble here because the volume's so low, and all of a sudden the roof collapses because there's nobody there to support the bid. But anyways, I think that's about it on the stocks I wanted to talk about. So if anybody has any questions about anything I've said, then feel free to go ahead and type away here in chat. If nobody has any questions, then we can go ahead, and if you have any questions about my service that I offer, what does it include, or if you're interested in this 50% off discount, or anything, any questions you have at all, really. Let's see, I'm increasing the volume a bit here. Is this better? Let's expand here. All right, let me catch up on all these questions. I'll start from Chris M. asked, what is the chat room like? Is it daily, open to close? Yes, chat room's open basically 24/7, 365. You can go in there anytime. There's usually some people in there. During the day, basically the most action is going to be in the first 2 hours, because that's basically when I'm going to be making my new trades for the day. The first 2 hours are the most important hours of the day for me. So that's basically when I'm going to find what stocks are breaking out now, new patterns, and am I buying them or not. The rest of the day is fairly slow to quiet. We're kind of just monitoring positions if we have them, talking about whatever if we're bored, or talking about other stocks that might be moving now. But usually the first 2 hours is basically when you need and want to be into the chat room for brand new trade alerts that we are hoping to capitalize on that day. Level 2 on A1, how closely do you watch it, especially in the first 2 minutes of trading? Level 2 is definitely something you need to learn. Basically it kind of shows you, where the buyers and sellers are, how much support is on one side, the bid, or, how many people are trying to sell this thing right now. I haven't done any kind of video or anything on level 2, but the Fous 4 Part 2 DVD, there will be a section on level 2 that'll be explaining kind of how I look and watch it. But it's definitely, I'm sure you can go find videos on YouTube right now about level 2, but it's definitely a very important thing. I look at level 2 all day long. A lot of my trading, I'm looking at level 2 in conjunction with the chart. So it's definitely important that you understand level 2. The 50% off is going to be available till midnight this Sunday. Unfortunately, no. Right now, there is no discount on the DVDs, but once Fous 4 2 comes out, I will be selling a package deal. Basically, it'll be $200 off for if you buy both the Fous 4 Part 1 and Fous 4 Part 2 in a deal. And also, at the same time, I'll be doing $100 off if you already have the Fous 4 DVD and now you want to buy the Fous 4 Part 2. There will be a discount of $100 on Fous 4 Part 2. Bob asked me, you only use the 13 EMA and 50-day moving averages? Yes, those are the only 2 moving averages I use. I look at the 50-day moving average, but it's not as important to me as the 13 EMA. But a lot of times with revival patterns, it's key to kind of look at the 50-day moving average as well, because a lot of times it's breaking out above the 50-day moving average as well. When it is breaking out above the 50-day moving average on that revival, that's kind of a better indication of, hey, maybe this is actually going to break out. But for instance, FCEL, this is a revival pattern that kind of failed yesterday, or today. It actually closed at 110 today. This pile of crap. This thing was very annoying. This thing gapped down this morning all the way down to 105. I only lost a couple $100 here, but I bought into this revival pattern yesterday, I believe at 108, 109, hoping to see this breakout. It did break out above the 50-day moving average, was breaking out above this neckline. I was hoping to see, a potential gap fill up in the 120s. It actually peaked out yesterday. I was up about $700, and then this thing gapped down today. I didn't want to see it drop any farther. The intraday chart on this thing is really annoying. It really just makes one move a day, basically, and that's about it. You can see here right into the close that just randomly had that volume come in. So this thing, traded very weirdly. So I took a small loss on this today, just on that gap down, just quickly sold. Charting, quoting wise, what system I use Speed Trader. If you want, that's what broker I use. If you are interested in them, definitely check them out. I'll give you Craig. This is my guy that he basically handles all my people in my system over at Speed Trader. So Craig at stockusa.com. I'm putting it in the chat room. Email him if you're interested in my broker. Speedtrader.com, and he'll give you the rundown of how everything works with SpeedTrader. But I've been using them for about probably 3 or 4 years now. Obviously every broker is going to have their problems. Sometimes there's connection problems, several times a year, which can be very frustrating. But overall, I've had an awesome time with SpeedTrader. Chris Ashley, 50% off, annual sub, not monthly. Note this is only for annual subs. No, we're basically the whole point of selling an annual subscription at a 50% discount is because you're locking in people for a whole year. You know, otherwise, I'm basically just doing a Fous TV at a Fous Alerts monthly price. So there's not really any point of doing that. There's got to be an incentive for me to offer this discount. I mean, there's other people that I follow on Twitter, but it's basically just to see what stocks I might not want to be wanting to get into because it's just a fake pump and dump from basically other newsletters that are out there. So, you know, a couple of times, I forget what stock it was, I had bought into it, and then I go look at my Twitter, and I'm like, oh man, these other assholes are in this thing. They're going to shit on our face here. And that's exactly what happened. I forget what stock it was. Maybe it was AOSK. I think it was AOSK. Basically, I had bought in because it looked like there was some volume coming in, but then it was actually just another newsletter pumping it. It was actually on this day right here. And then I sold for, you know, I think I lost about $600 on that trade. So Twitter, basically for me, all Twitter is for me is a marketing strategy. That's the only reason I use it, is just to get my name out there, let people know what's going on with my business, so I can hope that they come sign up. Anybody else that runs a website, that's their only purpose on Twitter, is just to basically market themselves. Other than that, the only reason why I follow Twitter is just to see what other newsletters are out there are pumping what, so I can, you know, kind of trade around that or avoid that trade because I know they're going to be buying and selling this thing and dumping it soon. So that's kind of how I use Twitter. Landon asked what my screening process is like. You know, I use various different screening processes, a lot of which are, you know, my own personal stuff that, no, I'm not going to tell you because that's my secret sauce. Basically, my scanning and screening is all provided to you as a Fous Alerts member. You get my daily watch list, and that's what my scans are. But no, I don't tell you what my scans are. Personally, basically, I know how to find everything that I need for me to trade, and I provide you with the best looking Fous 4 patterns every day so that you can benefit from those. But no, I don't basically teach people what my scanning process is. I teach you how to trade the stocks, and then I provide you with watch lists that fit that Fous 4 criteria, so you can hopefully potentially trade those. KGS, if I can have Rachel Starr join the crew. I hope so. I'm trying to get her to follow me here. I tweeted at her a bunch of times today trying to get her to come on the show and tell us about her trade on ROSG, if she even had a trade on ROSG. I mentioned it earlier, but if you don't know, ROSG during this whole debacle here, you know, I first announced and started talking about ROSG when it was under $3 per share on this day. And then all of a sudden, Rachel Starr, who is a film star, porn star girl that I follow on Twitter as well, all of a sudden started tweeting about this stock a bunch. I don't know if she was getting paid to promote this thing, but she was apparently saying that she was in it and trading it. So I was trying to get her to come on the show today and tell us about that trade. She was even retweeting some of my buddies that were tweeting about ROSG. So she was definitely actively involved in this stock, either trading it wise or she was getting paid just to promote it because she has over 100,000 followers. So basically, I was just trying to get her to use her to try to retweet me and get more people to come watch this webinar. But she did not reply to me, so I'll have to keep working on her to see if she'll come join up or join one of our Fous TV live shows. Is it eTrader.com? I'm not sure what you're talking about there. I did use eTrader in about 2006. Justin JS, if I bought a new car yet? Nope, I have not bought a new car. I'm still riding my Cannondale, but I definitely am looking for Maseratis every day for new ones that are popping up here locally. Bob asked if I use my moving averages to signal a short. You know, they definitely can be signals for shorts, but I actually pretty much I just almost given up on shorting. You know, I've made some great short trades, but overall, my mindset is too much as a breakout trader, and so it screws with my head trying to short. And overall, I've probably lost more money than I've made money shorting. So, you know, I pretty much just stick to the Fous strategy. If there's nothing out there, I just don't trade at all. You know, a lot of times there's just nothing there, so why are you sitting there trying to trade? You're just going to screw yourself over and make some stupid trades. You know, I've lost tens of thousands of dollars trying to just trade stuff because I was sitting there with nothing to do. So, you know, a lot of times it's good if there's nothing there, it's a boring day, you know, walk away from your computer, you know, go grab lunch or something somewhere. A lot of times it's good to just walk away if you're bored sitting at your computer, because a lot of times you're going to make a stupid decision and trade something that's not an ideal pattern or strategy that you know what's up. Bob Bill asked me how long it took me to break 25,000. You know, I actually blew up my account twice before I ever made it past 25,000. You know, I started with, you know, about 10 grand. You know, I was doing all right. My problem was, you know, I had, you know, traded for, you know, several years, and I had built a strategy, or learned a strategy more so, that I kind of adapted into my own. I was a member of 3stocksonfire.com in 2006, and basically that's what I based my whole web model off of, which Tim Sykes then basically kind of copycatted me. After I started, I was actually Tim's first or second interview at his website, following the CEO of thinkorswim.com, and he actually called me on his birthday. We did an interview, and that was pretty much my launch day for the technicaltrader.net. This was in 2008. But even back then, I don't think I was over 25. Maybe I was. It definitely took 2 to 3 years, you know, just to kind of figure out what I was doing. You know, I knew I had a strategy. I knew what I needed to do. What took me, you know, years to figure out was how to actually execute that strategy. You know, it's easy to know what to do. Once you get money in your hands, you make a lot of stupid decisions. And, you know, I was trading stupid penny stocks back then. You know, when I first started out, I was, you know, sitting there trying to trade 5-cent stocks, throwing everything into a 5-cent stock, thinking in my head, hey, this thing's going to frickin' possibly double, and I'm going to double my money, and I'm going to get over $25,000 quick. And that's definitely not the way you want to do it. You know, you need to take it slowly. This is, you know, not a game. It's not a game. You know, you got to be very serious about your money management, because one slip up, you know, you make one stupid trade, and, you know, all of a sudden go all in on a stock, or you try to bet on an earnings gamble. All of a sudden the stock drops 50% because, you know, you thought their earnings were going to be good. You know, also, again, I don't recommend anybody trade earnings. You know, what was it, CMG, Chipotle today? What was this? What did this drop? 21% just because the earnings report. You know, people, how many, like, there's probably so many investors that were in long this stock that just lost their ass because they decided to hold through earnings because maybe they were going to be right, and they took a gamble on a 50-50 chance, and then they just got completely raped on this stock, you know, down 21%. A lot of people lost millions and millions of dollars. So I never recommend ever to trade a stock to earnings, because I've been burned trading earnings several times in the early days, you know, trying to put a lot of money into a stock hoping that it's going to rally 30 to 40% on earnings, when instead it drops 50%, and I had a huge part of my portfolio in there. Excuse me. Justin asked, this isn't a dumb question at all, but do you get emotional over your wins and losses? If not, how do you learn to control that? You know, really, there isn't really any way to control it. Obviously, I get upset if I'm on a losing streak. But I've had days where I've lost $15,000 in a day. I had just gotten back from my Mexico trip. I was up $10,000 on the stock. It gapped down one day about 70–80%, putting me down, and I lost I think about $12,000 on that stock. But my account dropped about maybe it was over 15,000 that one day, but I lost about $12,000 on that stock when I was up $10,000 on it at one point. And that put me through the ringer. I had several big opportunities to make a lot of money after that, but my head was so little boggled after taking that big loss that it kind of makes it hard to think rationally and keep to your game plan. If you have a big loss, one of the best things you could probably do is just take a break. A lot of the times the worst time to be trading is if you're not thinking clearly. A lot of people have big losses and they come back and try to revenge trade. I talked about revenge trading in my DVD for a little while. If you're not thinking clearly, you're going to make irrational decisions, and irrational trading is going to lead to more losses, which eventually kind of turns into a downward spiral of you just making stupid decisions. And revenge trading, say I lost $10,000, then I might make some stupid decision, say, hey, if I put everything into this stock and this goes up, I might make that $10,000 very quickly. Basically, I make an analogy in the Fous 4 DVDs, like, say you fall into a ditch and you get down in this ditch, you're like, shit, how do I get out of this thing? And you look down in the ditch, and next to you there's, a bunch of tools, and you can build a ladder. It's going to be, a lot of hard work. It's going to take some time, and, it's going to be grueling. But, if you do it right, it's a way safer path, and you're likely to get out of this thing. Or next to that, there's a jetpack that you can strap this thing on. You can just go for it, and maybe you're going to get out of this ditch, in the next 5 minutes, and be, right back where you were before, and just keep on pressing on. But, you might kill yourself trying to fly this jetpack out of there, or you might even fall back down into this ditch because you don't know how to fly this thing. Then you break your leg, and then your jetpack's broken. Now you got a broken leg, and you're going to try to build this ladder to get out of here with a broken leg. So, it's a lot safer and easier to just grab those tools and try to build this ladder to get out of there. A lot of people try to fly that jetpack out of this hole, and either die or injure themselves further, which make it much harder to try to build that ladder. If that analogy made sense at all. Nope, I never look at Bollinger Bands. Basically what you're looking at here is RSI, volume, chart pattern with 2 MAs, 13 EMA, and the 50-day moving average. That's basically all I look at for technical indicators. Chris M asks if you can use freestockcharts.com. Freestockcharts.com is basically this exact same platform, which is TC2000 that you're looking at right now. The only problem with that is that it's only using BATS volume, which is not an indicator of real volume. For me, volume is a huge indication of, should I be trading the stock or not based on volume levels. So, it's a good free route to take, but at some point you're definitely going to need real-time charting with real-time volume levels. But for me, this costs $90 a month. For some of you, that's an extra big chunk out of your wallet that you may not be wanting to pay. But at some point, if you want to be a hardcore successful trader, you need all the real-time data you can get, because that's any little advantage you can take, you're going to want that. Diesel just asked why RSI over stochastics. You know, they're basically almost kind of the same indicator. I've just been using RSI for years, so that's just what I prefer. But, you know, RSI and stochastics are, you know, fairly similar indicators. I just prefer RSI. Just that's what I've been raised on here, trading. I just posted the link to the sign-up page. If you're interested in signing up, this is going to be a one-time payment of $1,197. This is 50% off as opposed to paying monthly for Fous Elite. So you pay one time, you don't have to pay again for a whole another year. So this is a huge deal, 50% off. I don't know if I'll ever be offering this again. So, you know, if you want to take advantage of that, basically you get Fous TV. That's going to be, you know, you watching this basically all day long. You know, I'm going to be sitting here commentating, making trades, all in real time. So anytime I'm buying something, I'm saying, hey, check out this stock. I just bought 10,000 shares, blah, 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 for this, you know, whatever reason. And also every time for my sells, you get real-time sell alert, you know, via chat room, email, SMS, as well as me talking about it here live on Fous TV. You also get 2 to 3 video lessons per week detailing trades for wins and losses, so you can see why I lost or why I sold somewhere. You know, basically just kind of giving you a review of the trades in better detail. In addition, we do a weekly webinar just like this, discussing, you know, whatever stocks we want or any questions you have. Also, you get the daily watch list, which is very powerful watch list. You know, probably about 70% of my trades come off my watch list, so it's very important that you are looking at the watch list every night as a member, because that's going to prepare you to potentially buy into these stocks. Another great tool I want to mention about TC2000 here is their trendline tool. Say, for example, I don't want to buy CMG, but just for example, say tomorrow if I on the watch list like, hey, watch out for CMG, if this ramps up over 322, you can right click that trend line, click set alert. I usually do only alert me once the first time it passes, otherwise you're going to be getting a bunch of crappy alerts every day for it going up and down. You set that alert, bam, press OK. Now there's going to be a little pop-up on your screen if that stock ramps up above 322. That way you don't have to be sitting there watching it. You can be doing something else, looking at some other kind of stock, and all of a sudden that alert will pop up as soon as that stock ramps up over 322. Then you can look at it, say, hey, do you want to buy this? Yes or no, and then you make that decision from there. But it's a great tool to have those trend line alerts. Chris asked, do you members find it easy to mimic your trades if you buy before telling them? Well, basically, as I'm buying a stock on Fous TV, I'm saying, hey, I'm just buying A1 at this price, blah, 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 blah. Obviously, nobody's going to be able to mimic me perfectly. These stocks, when I buy them, they're usually breaking out. You know, I'm a breakout trader, so the stocks are moving as I'm buying them. So obviously, anybody trying to follow me isn't going to be able to mimic me to the T. That's basically impossible for any trader. But yeah, you know, a lot of my guys make money off my calls for sure. Landon asks, you ever mess around with the Dash Trader platform on SureTrader? No, I have not messed with the SureTrader platform, but SpeedTrader, the trader that broker that I trade with, does use Dash Trader Pro. I've been using Dash Trader for about the last 4 years. It's awesome. It's very simple. All you need is level 2 and just be able to look at what stocks you have in your portfolio. And then I use charting through TC2000 and Thinkorswim.com. But Dash Trader is an awesome, highly powerful but very simple trading platform. There's no like stupid bells and whistles and stuff like some E-Trade Pro platform has. It's very simple, to the point of everything that a day trader needs just to be able to execute very fast trades. Justin asked if I have anyone helping me, business trading partners. No, I don't have anybody helping me. It's a one-man show. I have a web guy that actually linked up with recently. I designed FousAlerts.com, the new website. He put it together, and now we're actually getting started on an SEO campaign, figuring out how to get all that implemented. So I have a guy, web guy that I'm working with, but no trading affiliate per se that I'm working with. Chris asked if I can only swing trade right now, what's best to start? It's hard to say. Fous TV is definitely, probably a little bit more geared towards day trading, but if you want the fastest alerts and you want to hear what's going on, and you also want trade reviews to understand exactly why I bought or sold, the best bang for your buck is definitely Fous Elite. As a Fous Alert subscriber, that's more so for people that kind of maybe know what's going on in their trading, and they just kind of want to see what trades are going on, and they kind of have their own thing going on. But if you're a new person to trading, being a part of the Fous Elite is definitely going to be for anybody. I have way more Fous Alert subscribers than Fous Elite, obviously, because it's cheaper. But I feel like the Fous Alert subs are kind of lost with what's really going on, because they don't hear what I'm talking about all day long. When I'm in the chat room every day, I'm sitting there talking, and I'm making brief little comments in the chat room as well. But what most of the analysis is coming from is me talking live on Fous TV. So I'm definitely more geared towards catering to Fous Elite subscribers. They also get the weekly webinar, as well as get to see the video lessons where I actually explain the trades in detail. So I mean, it basically comes down to what you can afford, but obviously Fous Elite has the most features that are going to help you become a better trader. How are we doing on questions here, guys? Any more questions anybody wants to answer? JL asks, what % of my trades are swing trades? A lot more lately have been day trades. The market's been extremely volatile. Basically, when I'm most confident in day trading or swing trading is when the market is trading above the 13 EMA. So, for example, during periods like this is the Dow Jones daily chart we're looking at here. Actually, I have a really good blog post or a video post where I explain kind of when should you be confident in swing trading Fous 4 patterns, and that's when the market's trending along the 13 EMA. So periods between here and here, these are great times. Last summer was a complete shit show. Thankfully, I left the country for about a month during this whole debacle. We're actually on a 4-day chart for some reason. But you can see last summer, this was just chaos throughout here. I was gone for basically all August for my birthday in Thailand and Australia and Malaysia. Basically, when you want to be confident in swing trading is when we're trending along the 13 EMA. From about December to about March of this year, we had, a solid run. I made about $70,000 between those months right there. It was just a killer month where we could have confidence in swing trading. But lately, pretty much ever since I joined Profitly, I actually joined Profitly I think like right about here in when was this, February? I don't remember when I joined. But I believe it was somewhere right around here or here. But as soon as I joined, the market just completely flipped and was in the gutter for almost a month or so. So when that happens, obviously I'm a long bias swing trader. So buying into breakouts is a very difficult thing to do, and so I'm going to be scalping a lot more on the day trade side and just taking that quick bang, that quick morning pop in the morning. Then the rest of the day is going to be, a lot of shady, crazy action. We're actually looking pretty good along 13 EMA now. We're trending above it as of this point, but we're kind of chopping back and forth. So as of right now, a lot of my trades are day trades, just simply because the market's kind of been choppy, and there's also all this fear about Europe and stuff. So when there's fear in the market, lots of swing trades are much harder to hold because there's this fear in the market, and then that makes me a little scared to be holding because I want to take that profit and move on and not have to give that back. But a lot of my trades lately have been prone more towards day trading, just because I want to take that profit and move on and not have to worry about giving it back. But also, there's been a lot of huge Fous 4 patterns, such as PPHM had this huge 100% run right after my buy call. HW, this is a Fous 4 pattern, Fous 4 force pattern that broke out, made a big swing trade run there. HZNP, that was another huge run there on that revival pattern. So there are swing trade patterns that had just recently worked out very strongly to the upside. Unfortunately, I was still in short-term profit mode and only took small pieces of the pie because the market has been so volatile lately. So, it's hard to gauge when to be bullish or not, but the patterns are there. Sometimes it's good, just like A1 this morning. I made $2 grand on this stock. This thing came all the way back down to my initial buy price, so I was very happy with just day trading this. PBHM, not so happy that I took about a $1,700 gain right here when I would be up, probably over $10,000 on this trade if I would have just held it on a swing. Just announced if I'm taking any vacations anytime soon. My birthday is next month, August 19th. I don't have any tickets booked. I actually bought a ticket to Brazil when I was pretty drunk on Saturday, and I actually canceled that because I met some random Brazilians. They told me to come visit them, so I was with